Have you ever wondered why Canada is in debt? Have you ever wondered why the government forces Canadians to pay so many taxes? Have you ever wondered why the bankers from the largest private banks are becoming wealthier and the rest of us are not? What I have discovered is the banks and the government have colluded to financially enslave the people of Canada. The government borrows money from the private banks. They then lend the debt-based money to Canada with compounded interest. The government then continues to increase taxation of Canadians year after year in order to pay back the interest on the exponentially growing national debt. What results is inflation. The government gave the banks the ability to loan out money that doesn't exist in the form of loans. They click a key on a computer and generate the fake money out of thin air. They don't actually have it in their bank vaults. Presently, the banks only have $4 billion on reserve, but they have loaned out over $1.5 trillion. Their freedom, and they need to be stopped. It said the following, and I hope that all of you remember this. Never doubt that a small group of people can change the world. Indeed, it is the only thing that ever has.
Never doubt that a small group of people can change the world. Indeed, it's the only thing that ever has. Good morning, everybody. Welcome to the Impact Money Show. I'm your host, Bruce Porter Jr., joined by my brother and co-host, David Porter, broadcasting live from the heart of Washington, D.C. It's Monday, June 16, 2025, and we've got a packed show today covering everything from the financial markets to the geopolitical storm brewing around the globe. But first, let's kick off with a look at the weather right here in D.C. It's cool, 63 degrees Fahrenheit this morning with a 5% chance of precipitation. Thankfully, no major storms to worry about today. Humidity is high at 94%. Pretty much the norm around here. It's swampy. It feels a bit sticky, and we've got a light breeze blowing at 7 miles per hour. Perfect weather to grab a coffee and settle in for some hard-hitting truths on the Impact Money Show.
That's right, Bruce. And speaking of DC, the city's still buzzing from this weekend's massive military parade celebrating the U.S. Army's 250th anniversary. On Saturday, June 14th, an estimated 200,000 people lined the streets to watch 6,600 soldiers, 150 vehicles, including the M1A1 Abrams tanks, lots of tanks, and World War II era Sherman tanks, and over 50 aircrafts from the Chapter 47 helicopters to the P-51 Mustangs rolled through the Capitol. The parade, which cost taxpayers a whopping bunch of millions of dollars, also coincided with President Donald Trump's 79th birthday, though he insisted it was more about Flag Day than its own celebration, which there was only a small remarks of his birthday, so maybe that's true after all.
Absolutely, David. And while the parade was a spectacle, it's a drop in the bucket compared to the financial elephant in the room we need to talk about. The U.S. national debt and the stranglehold the central banking cartel has on our nation. Folks, it's the core of why we do the show, to pull back the curtain and expose the forces draining our wealth and sovereignty. Right now, it's like and I want everyone to I know everybody talks about, the national debt and all this and all that, and it's hard to get your head around, but I want you to just pull back for a second and understand why we're in the situation that we're in. And why it's not sustainable and why we must get ourselves out of it. Right now, the U.S. is paying more in interest on our national debt than we spend on the entire Department of Defense. Now, I just want to bring that into reality, because even me, I heard it, I've heard it. Oh, we're paying on the national debt. Just forget the national debt and everything. Just for a moment. We are paying a shadowy group of people who don't answer to anybody, that operate above the government, more money than we are paying for our entire defense apparatus, or offense, however you want to call it, our entire military. We're paying them more than we're paying for our entire military apparatus. All the ships, everything around the world, everything that we do, we're paying a shadowy cartel that answers to nobody. And then we wonder why we don't have control. Well, of course we don't have control, because we're paying these people all this money. We don't even know who they are. Who are they? People don't even realize that the Federal Reserve isn't federal, that it's actually a private group. Guys, Let that sink in. In 2025, the interest payments of the national debt are projected to exceed $1 trillion annually, dwarfing the roughly $900 billion we spend on military defense. This money is going straight to the central banking cartel, a shadowy, unaccountable group that loans us money that they don't even have. They're not even lending us real money. I would say it's a scam. I used to always say it's a scam, and it is a scam, but it's an enslavement apparatus. We are slaves to this shadowy cartel because we can never actually pay them back. And they have total and complete control. And for what? They don't even lend us the money. It's a crazy situation. Woodrow Wilson got us in this situation. Most of the West is in this situation. The central banking cartel is not basically running the world. It is running the world. They do it with fractional reserve banking. Like I said, they don't even have the money. And who pays for it? You do. You pay for it through the taxes and the hidden tax of inflation, which erodes purchasing power every single day.
You're hitting the nail on the head, Bruce. The Federal Reserve, which is neither federal nor reserve, is at the heart of this. It's a private banking cartel, like you said, and its influence over our economy and foreign policy is staggering. Some claim this cartel is predominantly Jewish, but let's be clear. Our issue isn't with any groups of ethnicity or religion. It's with the system itself. A system that keeps us in perpetual debt, funds endless wars, and prevents us from achieving true freedom. Until we break free from this cycle of borrowing and printing money, we'll never control our own destiny. And let's talk about those wars. The central banking cartel has a vested interest in keeping the U.S. military engaged globally. Why? Because war is profitable. It justifies massive defense budgets, keeps the dollar as the world's reserve currency, and distracts us from the real issue, our financial enslavement. Look at Ukraine and Israel conflicts we're deeply entangled in, not because of national security, but because the cartel demands it.
And guys, think about this, okay? So we're paying this shadowy group, this central banking cartel, more than we're paying for the entire military apparatus of everything. We're paying them more every year, and for what? For basically nothing, to rule us. And then they have total control of everything. So it's not even our military. If it was our military, what would they be doing? They would be deporting everybody, right? They would be deporting all the illegal aliens, but they're not. They're over fighting a bunch of wars that we don't want to be in. So we are slaves, guys. Everybody needs to really figure this out because we have got to figure a way out of it. I don't have all the answers, I'll tell you that, but I can tell you what's going on because it's obvious to me what's going on. We've been at this. We have the heartbeat of what's going on here. We're talking about it on the show all the time. I've been preaching it for 10 years with the Bitcoin monetary revolution, over 10 years. So our military works for the central banking cartel. We pay the central banking cartel to quote unquote lend us money that they don't have. And then they have total control in our military fights for them. We don't want our military over there. I don't want our military. Our president ran on not having our military in all these places and deporting everybody. And what happens now? The exact opposite. And to be honest, I don't think that's what Trump wants, but I have no idea. I know that's what the central banking cartel wants. Let's dive into the Middle East first because the situation there is spiraling out of control. Israel is under heavy fire from Iran, and it's a conflict Israel largely brought on itself through years of provocations, assassinations, bombings, and covert operations. Iran, and not to mention, of course, bombing them that started it less than a week ago. Iran, to its credit, showed restraint for a long time, responding with measured strikes despite Israel's aggression. And I said this on the show, and I got blowback from people, and I won't mention who because we're all friends here. Oh, no, that they threw everything they had at them. Oh, no, I think they threw everything. No, they didn't throw. They sent 700 drones in, slow flying, told them they were coming. And, I don't think so, guys. And, now we see this unfolding here. It's to its credit. showed this restraint. But now Iran is unleashing more capabilities. I wouldn't even say it's a full capabilities. I would not say it's a full capabilities. I don't think we've seen everything yet, guys. They probably already have a nuke. Whether they built it themselves, which they probably do. They seem like pretty smart people. Those Persians are pretty smart, and or they got it from Pakistan or from North Korea or from wherever else. And Israel is reeling, and they are reeling. There's talk of Israel's secret nuclear arsenal, of course, which it's not even really secret. I mean, it's secret because it's not recognized by the entire world, but everybody knows that they stole the nukes from the U.S. Everybody knows, I think. I mean, you know that, right? They stole the nuclear stuff from the U.S. and they have nukes and they don't have any treaties with anybody. And they actually, from what I understand, have a plan in order to wipe out the entire world. If they go down, they're like, we're going to nuke everybody. Some are calling for the denuclearization to achieve peace. I am definitely calling for the denuclearization of Israel to achieve peace. Meanwhile, the U.S. is far from a bystander. It's far. Reports indicate we've got 30 in-air fueling replanes headed to the Middle East right now, signaling a deeper commitment to this war. So much for President Trump's no war campaign promise. It's looking like we're being dragged into another conflict for the benefit of the banking cartel. And let's be honest, we haven't decisively won a war since World War II, despite being at war continuously since then. And let me just clarify this before I hand it off. We've been in this war since the beginning. Netanyahu or Polakov or whatever his name is, it came out yesterday, I think. It said Trump knew he was blowing cover over the last couple of weeks in order to make it look like we weren't going to attack. Now, whether he's just mad trying to make Trump look bad or what, but we have been materially involved in this conflict for the last couple of days since it started. Shooting these missiles out of the sky and everything else. Now we're sending more stuff in. We have ships and everything in the area. We are involved. People are like, stay out of it. No, guys. There's no staying out of it. We are in it. We need to not stay out of it. We need to get out of it.
And while Israel fights Iran, they're simultaneously intensifying their campaign against Palestinians, which people are calling a genocide. Even amidst this war, Israeli forces continue to kill Palestinian civilians, including women and children, and push the narrative that Palestine never existed. It's heartbreaking to see the human toll. The international community is outraged, and the U.S. continues to back Israel, no questions asked. Why? Because the central banking cartel and its geopolitical allies dictate the foreign policy.
I mean, you just said a mouthful there, David, and that's why. Because we are not in control. We have a central banking cartel that is in control. We send them all our money, and they use our military. We are not in control. We would not be killing hundreds of people per day in Gaza. I mean, women and kids. I mean, it's just, the toll is unbelievable to even just get your head around. We would not be in this war with Iran. I mean, what did the Israelis didn't know that Iran had all of these. I mean, it's hard for me to believe that Israel didn't know. They knew. And then they knew. I bet the perpetual war really is the thing. Now let's shift to Ukraine. Things are looking grim. The war drags on, and Russia under Vladimir Putin is gaining ground. Putin's strategy has been methodical: grind down the Ukrainian forces, control key territories, and wait for the West to overextend itself. We sure are. With the U.S. now diverting military equipment from the Ukraine to Israel, there's a risk that Ukraine could collapse. Putin knows this, and he's likely to press his advantage. Meanwhile, China's watching closely, with the U.S. distracted by multiple fronts. Could this be the moment that Xi Jinping moves on Taiwan? Tensions in the South China Sea are already high, and the weakened U.S. military presence in the region could embolden China. The banking cartel thrives on this chaos. It keeps the war machine humming and the debt piling up.
And let's not forget President Trump's domestic promises, which are already unraveling. One of the biggest reasons MAGA voters backed him was his pledge to deport criminal and illegal immigrants and secure the border. But just months into his second term, he's backtracked ICE has been instructed not to deport illegal aliens from working on farms or in other vital jobs. If you've got a job, you stay. Simple as that. So the large-scale deportation Trump campaigned on, not happening. This is a gut punch to his base, who also voted for no new wars and in the existing ones. Instead, we're deeper in the Middle East, Ukraine's on the brink, and the border remains porous. Two major pillars of the MAGA platform are gone. It's a stark reminder that even the outsider president is beholden to the same forces running this show.
It's just it is a big gut punch. I mean, I'll tell you what, guys, I didn't have any illusions that we were going to have the largest deportation force and everything else. Unfortunately, of course, I wanted that to happen. Who doesn't want people that are here illegally to, it's like someone who's not supposed to be in your home. Of course, you want them out of your home. I mean, that's simple, right? I mean, come in legally, it's fine. Come in my front door. I say hi. Let's talk, have a beer or something. But I mean, you sneak in illegally. It's something totally different. Mm-hmm. All right, folks. This is the Impact Money Show. Let's pivot to the markets and break down what's happening with your money. The U.S. dollar is taking a hit on the DXY, down 0.22% to 97.97. That's a sign of the weakening confidence in the dollar as the global tensions rise and debt concerns loom. A weaker dollar means higher prices for everything from gas to groceries. So keep an eye on this. On the stock market front, U.S. stock futures are looking bullish this morning. Dow futures are up 0.4% at 42,692 with an implied opening of plus 161. S&P 500 futures are climbing as well at 0.45% to 6,006, though the implied open is slightly negative at negative 2.5. I don't think that's correct. Dow futures are up, okay, and also S&P 500 futures are up. NASDAQ futures are leading the pack, up 0.54% with a positive implied opening of 119. Investors seem optimistic, but the geopolitical risks are mounting. This rally could be fragile.
Over in Asia, the markets are up mostly, and Hong Kong Stock Exchange is gaining at 0.7% at 24,060.99, reflecting the resilience despite regional uncertainties. The Japanese yen is holding steady against the dollar, up slightly at about 0.05%. A stronger yen could signal safe haven demand and investors brace for volatility. In commodities, the WTI crude oil is pulling back after last week's surge, down about 0.62% per barrel. $72.53 per barrel. With the Middle East on edge, oil prices could swing wildly, so stay vigilant. Gold, the ultimate safe haven, is down at $3,437 per ounce, but is still near record highs. Silver, on the other hand, is bucking the trend, up to $36.49 per ounce.
And let's talk crypto, because digital asset space is on fire. Bitcoin up 1.83% at $107,000, continuing its meteoric rise. Ethereum's even hotter, surging 4.34% to 2,622. XRP is climbing 1.79% to 219. It's been right around that 219 for a while. Every time I look at it, I feel like it's 219, up or down. Doggy coin, one of my favorites, or the Dogecoin as some people call it, is up 1.93% at 17 cents 73. And Litecoin's gaining 2.3% at $87.17. Crypto's thriving as investors hedge against inflation and fiat currency debasement. Exactly what we've been warning about.
But here's the bottom line. None of this, wars, debt, or the market swings, happen in a vacuum. It's the central banking cartel pulling the strings, and until we dismantle their grip on our economy, we're just pawns in the game. That's why we're here every week, breaking it down, giving you the tools to protect your wealth and reclaim your freedom.
Well, you couldn't have said it better, David. We've got a lot more to cover today, including expert guests who dive in and deeper into the issues and share strategies to navigate this chaotic world. So grab your coffee, buckle up, and stick with us here on the Impact Money Show. We have the Market Watch report with our good friend Matt Dixon. Sir Matt the Great. He is out there working on his EVA. He has got EVA meeting, so he dropped us a recording today. So let me pop that right here. Boom.
Good morning, Bruce. Good morning, Impact Money viewers. So this morning, well, we've not woken up. Obviously, we've had a weekend of it. Started Friday of Iran-Israel trading shops, and it's just absolutely surprising that the markets seem to be taking it very much in their stride. Yes, there's a little bit of a sell-off on Friday, but that's not really followed through. I mean, right now the markets are looking really positive. I'll just start with the S&P 500 we've got shown here. Obviously, it's futures, but the futures are showing a very positive beginning to the morning, up 0.3%. And we can see this green candle right now. This is a daily green candle. This, of course, is the futures. As I say, anything could happen later on in the day, but things seem to be escalating in the Middle East. I think the response from Iran has been a bit of a surprise for Israel. I think much stronger than expected. I think Israel thought it'd be a walkover, and it's proving not to be. Although the Israel attack was pretty successful, but I understand not backed by America or any of the European nations, UK, for example. So Israel are on their own here. And as I say, they had a pretty effective first strike on Iran, trying to take out those nuclear facilities. But Iran have had a pretty robust response. So I am surprised that amongst all of this and basically the threat potentially of the Straits of Hormuz, the Persian Gulf being closed, that's a possibility. I understand from a senior source in the region that it's highly unlikely that the straits will be closed. So that will protect oil prices, will stop oil prices rising too much. I mean, we've started with S&P. I'll just jump over very quickly to the oil price. I mean, the oil price took obviously a sharp jump, but we can see that shadow there, that long shadow from the top downwards, that the oil price is retreating quite rapidly. So we peaked there at 77.50. We're currently 72.90. So oil price at the moment is coming down, and this despite the ongoing aggression, continuing in the Middle East. So I don't really understand markets at the moment. In the past, the response has been much, much greater, much more exaggerated than we're seeing at the moment. But for some reason, the markets are taking it very much in their stride. Maybe they know something we don't. We often say that these days. But I'm surprised. Even Bitcoin, we had Bitcoin obviously took a strong leg down, but then that's recovering very, very sharply. We're at 106,600 right now, heading back towards all-time highs, it seems. So we'll take a closer look, perhaps at the shorter term. This is the daily. Let me just take a look, first of all, Solana. I love to use Solana. Sometimes it gives me some guidance as to what's happening in the rest of the market. Solana is reasonably clear. We had wave 3 top, which was $295. That was the all-time high for Solana back in January of this year. January 2025, we had the all-time high. And we had this move down, which I always assert is a corrective move down. Because we had a triangle in this position, triangles cannot be in a wave 2 position. So it's some kind of small B wave. It's not a wave 4, it's too early on in this cycle. So some kind of B wave. So we've basically got some kind of ABWX, ABY to the downside. Not got all those labels in place, but it's some kind of correction, I believe, to the downside. And now we're moving back towards the upside. And I think that we have had a 5-wave move. We've got a legitimate 5-wave move, whether this is labeled correctly or not. So one way or another, we have some kind of 5-wave move. It could be that wave 1 is somewhere here, 2, 3, 4, 5. It's basically a 5-wave move. It looks impulsive. And the reason I say that is there isn't overlap in the waves. Unlike, for example, this wave down here, where the movement up here overlaps this movement down here. We don't have that kind of overlap at all in this movement. So I conclude that this movement from the bottom here, which was 90 something dollars in Solana, back up to that local high there of 190-ish, 188, I think, that was an impulsive move. That's telling us that the direction has changed back towards the upside. In fact, the direction never changed because this was a correction here. Corrections, by definition, are against the overall trend. So the overall trend for Solana remains to the upside, even though we had this strong move down from 295 all the way down to $90. That was actually against the trend. And if we were to scroll out even more, I won't bother doing that now, we would see that obviously Solana came from, not long ago, it was only $8 or so, and had that massive rally all the way up to $295. So this correction, although it's a massive correction, was just that, a correction against the trend. So now we've begun, I think, an impulse to the upside again and a correction to the downside. Now, whether that correction is over is what we're looking at now. And the correction, as far as I'm concerned, doesn't look as though it's over, to be honest, because from the top here, we do have 5 clear waves down. Now, assuming this is the impulse higher, a 5-wave move down is just an A wave. It's not an impulse down, even though it's 5 waves. It's much smaller than this bigger impulse to the upside. So this is the impulsive direction to the upside. This is part of a correction. So I would conclude that this little 5-wave move here is just an A wave. We then have a B wave higher, and I think we're working on a C wave. So the C wave itself will be made up of 5 waves. C waves are 5 waves. So I am concluding that this, from the top of this B wave here, we basically have a movement down, which is wave 1 of C, then a movement up. We're working on wave 2 of C right now, and it's gone a little bit higher than expected, but wave 2s can often be deep, very deep waves, deep correction to this wave 1 down here. So we've got a wave 2 here, and then we will get, I believe, a wave 3. So I do think that the troubles from this escalation in the Middle East are not yet over. And so I think when the markets really get into gear, probably later today, maybe tonight, tomorrow. The thing is, we cannot go past the top of this wave B. If we go past there, then it looks like the correction may be over and we're just going to push to the upside. But at the moment, I can't see that because we have 5 waves down. We've got a 3-wave move. You can't see it on this time frame, but if I were to break it down, this is a little 3-wave move to the upside. We can actually see this, believe it or not, more clearly on Jasmine. I'll show you that in a moment. But we have the B wave higher, and we're going to be working down on this C wave to the downside. And then we will have a clear A, B, and C. Now remember, the C wave will not be able to surpass the bottom of this wave here where this impulse started. So we have a floor to it. So this, if we do descend lower on Solana, this will be the most amazing trade with risk reward right in your favor. Because the risk will be, if we were to get down here, potentially around the $101 area. That's the possibility if we go to 1.618. Even if we go to 100% of the A wave, that would still be $127 for Solana. So I would start to DCA around this level. And if it goes lower, I'd DCA more and more. My ultimate stop loss would be anything below this, this wave here, because we can't go below this if this wave count is correct. And that level is about $95. So yes, it's a lot lower at the moment, but we're expecting that we'll only place trades if we get a dip. And we'll look to DCA and buy the dip at these different levels. And if we do that, we'll have a stop loss just below. So the loss would be potentially small, but the gain would be potentially quite massive to the upside, probably beyond this. We'd probably look to target new all-time highs, to be honest. So I'm suspecting maybe we get more trouble continuing for the time being in the Middle East, but then we'll get a really nice time when hopefully there'll be a resolution of that conflict. Markets will be looking better. Maybe we'll even see a softening of interest rate expectations, because at the moment, don't forget, we've got the interest rate meeting coming up on Wednesday. That is going to be quite important, but it's nailed on that we're going to get a hold. I'll just dip very quickly over to... it's taking time to load. Let me just reload that, see if it'll come. Yeah, here we go. So this is the interest rate expectation, and we've got 96.7%, I think. Yeah, 96.7% chance of a hold in rates coming Wednesday. So basically it's nailed on that rates are going to hold. It also looks, if you look out further out to the next meeting after that, we still have 80.7% chance of a hold at the July meeting. So again, it's nailed on pretty well that we're going to hold in July. And as we've said many times before, the first chance of a cut is here There's a bit of forget that basically the first chance of a cut is in September, where we have 56.4% chance of a cut in rates. So I am expecting a cut in rates, probably the first one to be September. But before September comes, we will start to see a softening of interest rate expectations, and that may align quite nicely with a massive rally coming in the market. So if we see a resolution of the issues in the Middle East and we see a softening of interest rate expectations, that will be enough to spawn a rally to the upside, not only for Solana, but for Bitcoin and for most of crypto. I think we're seeing an amazing rally to the upside. But right now, I don't think the correction is complete. As I say, I think this is just A down, B up, and working on C down. So I expect lower to come later today. So it's quite deceiving right now. Again, I won't go short this market at the moment because the rally that's going to come, I think, is going to be quite a substantial rally. I would not dare go short in this market. But right now is not the time to go long because we're rallying higher. And I don't chase rallies. I would wait to buy dips. And as I say, I've got a couple of levels there where I'd be looking to dollar cost average to buy into the dips, hopefully, ready for the major rally that's coming after that, I believe. But risk reward will be in your favor. So if you do take those long trades, as I say, the risk will be small, the reward will be great, and that's what you need when you're trading. So, I mean, that's Solana. And as I say, for me, it looks reasonably clear. I'll just show you that. I did mention I'm just going to show you on Jasmy the clarity here. So it's a bit like, it's a little bit like Solana. We have 5 waves down from this top. So this is a 5-wave down. I've concluded this is actually an A wave down, or it could even be a wave 1. But if it's an A wave down, I've got it labeled as wave 1 here. It could be some kind of A wave. I'll change that if I can, if it will allow me. For some reason, it's taking time. But whatever, I've labeled it as an A wave down. We've got some kind of B wave to the upside. But whatever it is, it's a wave 1 or it's an A wave. So we've got 1, 2, 3, 4, 5. That's a very clear 5-wave move to the downside. So we can see that wave 4 has not overlapped into wave 1. We've got an extended wave 3, and the wave 3 itself is made up of 5 waves. 1, 2, 3, 4, 5. This is a really nice, satisfying 5-wave move to the downside. And then we've got apparently an ABC, and I showed this in advance on my X feed saying I expected there to be a rally to the upside. And that's precisely what's happening. I'll just move over to the 4-hour. I think the internet is being a little bit dodgy this morning, but we can still see that basically from the bottom of that wave 5, which is now shown here as an A wave potentially, we've got an A, a B, and we're working on the C wave higher. Following the C wave, I expect there to be some more downside movement. So that actually aligns with Solana, with the expectation there that we've had this little corrective movement to the upside, and then we should get a C wave, a larger C wave. So this is A, working on ABC for the B wave, and then we'll get a C wave to the downside, potentially taking us lower for Jasmy. Same as I'm expecting with Solana and with actually most of the cryptos. So this is just a correction to the upside. So we should resume to the downside soon. So I think this is just a little bit of respite during quiet market times before the market's really open. I mean, it's still early morning that we're talking at the moment. So before markets are really open, we're just correcting. But then the resumption to the downside will take hold, I believe. And that's when I think these S&P futures will reverse. So again, just jumping back to the S&P here, we can see at the moment we do appear to have a correction to the downside. This is just the 4-hour chart. So we've got an ABC movement to the downside, and then we're moving probably ABC back to the upside. And then we'll probably get a C wave down again to the downside on the S&P 500 before we then start moving higher. So I still think that we're in corrective mode, even though things are looking positive at the moment for the S&P 500. Early days, early hours, I would say, of the beginning of the new week. I think we probably will resume more downside. So let's get over to the big one, Bitcoin. Once again, we seem to have some kind of bit of an impulse to the downside. I think this is just a correction to the upside here. So again, I think that we're going to get a further downside move before we then rally really impulsively and conclusively to the upside. So again, we can see that overall we've got some kind of corrective move here, A, B, C to the downside. We could have started moving impulsively to the upside. It's quite possible this is an impulse higher and that we're just working on a correction down. So if that's the case, if it's an A, B, C correction down, and the B wave is often made up itself of an A, B, C, so it looks really nice, we would expect a C wave to the downside. And I think that will come and take Bitcoin down again to give us opportunity to buy the dip once again. So basically, just to kind of conclude, we are expecting, or I am expecting, that this early morning rally that we're seeing in risk assets, cryptocurrencies, S&P 500, etc., is actually going to fizzle out, and we will see some more downside to come later today, maybe tomorrow. So I think there's a bit more downside to come. But overall, I'm positive. Slightly longer term, I think we are going to get a major rally coming, particularly Bitcoin-led, but among the other crypto assets as well. I'll just jump again over now to the dollar index. Let's just get to dollar index here. Taking a moment to load, but dollar index is basically really fallen quite sharply. It's okay, we're on dollar index, that's nice. Just to shrink that again. We've actually theoretically potentially completed the move down because wave 5 has exceeded the bottom of wave 3, and I'll just shrink this a little bit to show you. So we got a movement from the top. We've actually been expecting, and I probably do expect more movement down. I'll just flip over to the weekly and show you. This is the long-term trend that we're looking at with the US dollar. And we can see right back to 2008, the US dollar has been climbing in this kind of parallel channel. It's not a perfect parallel channel, but it's pretty good. So we've got dollar index, so the dollar strengthening since the financial crisis of 2008-9, a strengthening of the dollar. That has coincided with, obviously, Bitcoin started in 2009. So it's coincided with a long-term appreciation of Bitcoin. So long-term, there is a direct correlation between Bitcoin and the dollar, the US dollar, but short-term, there's actually an inverse correlation. So it's really interesting that, and we need to define whether we're talking short-term or long-term when we're talking about these correlations between the dollar and risk assets, particularly Bitcoin here. So for example, when we had the FTX low of 15,500-ish, that corresponded with a US dollar high here. When the US dollar index was at 115, somewhere around there, that's when we had the FTX low for Bitcoin of 15,500. Then we saw the dollar falling substantially, and that's correlated with the rise in Bitcoin to now 106,000 today. So I don't think the fall is quite yet complete. So I do think that we probably have more upside to come, probably to take us ultimately to new all-time highs. But remember, I'm talking long-term here. We're on a weekly chart. Long-term, I think we're going to get a new all-time high for Bitcoin. But then following that, longer term even, I think the dollar will start to rise, and that will mean probably more geopolitical uncertainty in the world coming, maybe economic uncertainty, whatever, but we're going to see dollar strengthen at some point eventually. After this weakening, I'm expecting to continue. We'll see dollar strength. That'll be bad for markets. So let me just go back and focus on shorter term again. I've gone back to the 4-hour now on the dollar index and try to show where I think we're at. So we can see here, this was that long-term parallel channel I was talking about in blue, that shaded blue. So we can see that potentially we have lower to go if we're going to meet the bottom of that channel. My target actually would be, if we've got an A, B, C kind of movement, 100% equality between the A wave and this C wave we're working on here would be 95 for the dollar index. And we're currently at 98. So we're actually quite close to it. So we've not got much further down to go for dollar index. So that might give us a bit more of a rally ultimately in Bitcoin to new all-time highs, perhaps. But following that, I think that we're going to start to rise in dollar index. So I think it's only going to be probably one more reasonable, decent all-time high to come for Bitcoin before we start to see a turnaround in markets to the downside if we start to see this dollar rally, which I think, I can't see any reason why it won't according to this chart. We've got this very long term, right back to 2008-9 financial crisis, this rising dollar trend. And I think that the dollar is still in a rising trend. This is just basically a small move, a small counter trend move. ABC move to the downside before we start to move again to the upside on dollar index. So I think we do need to try to put this all into perspective to conclude where we're at. I mean, again, I'd love to go look at other assets, but I think we need to just understand where we're at and the timeframes we're talking about to try and make this clear for people for their trading perspective. So I do think short term, this is looking almost immediate. We have this movement here, an ABC movement to the upside following this impulse down. Got an ABC movement to the upside. ABC is always followed by a counter move to the downside here, which should be a 5-way move to the downside for Bitcoin. So really short term. Again, perhaps later today, tomorrow we start to see some downside on Bitcoin, a 5-way move to the downside. But this is all an overall correction to the downside. Following that correction, which starts, as I say, later today or latest tomorrow. So following a bit more downside for Bitcoin and for the rest of risk assets, we then see a really decent rally to new all-time highs for Bitcoin, which will be followed by a lot of the crypto assets. We'll get some new really impulsive movement to the upside for crypto assets. So following downside, we then see upside to new all-time highs. But following that will correlate with a dollar index low, and the dollar will start to turn then toward the upside. And that's when we start to see probably a major correction coming. So I'm predicting this well in advance, that even if we see a new all-time high for Bitcoin, following that, we're going to see a major slump in Bitcoin and risk assets. So it's going to be one new all-time high to come for Bitcoin. I can't tell you exactly what it will be, possibly 120-ish area. Not massive. I don't think we're talking the $250,000 or $1 million that Michael Saylor and so on are talking about yet. Maybe long term, that's possible. But following that all-time high, we're going to see a major slump in risk assets. And I don't want to look any further into the future. We've done enough for the time being. We've looked at the short-term downward movement, medium-term upward movement, long-term downward movement. So that's just telling you we're breaking it down to the actual movements in time frames. So the short-term movement, we're talking about days and week ahead, perhaps. That's the short-term downward movement. Following that downward movement, and we're talking a week or more ahead, for the following weeks after that, we should then see some really decent upside movement. But then following that, and we're talking maybe only a month or so, we then start to see some serious downside, I think, in the markets. And I have said, and I've got it pinned on my tweet on X, that I'm expecting major recession to come in the US later this year. That still holds. So I think we're headed for economic trouble, maybe more geopolitical trouble down the line this year, which is going to cause a major sell-off in the markets. But before that happens, I've got a new all-time high to come for Bitcoin, probably for the S&P 500. For a lot of the crypto assets as well. Ethereum won't reach new all-time highs, but we're still probably going to get another high for Ethereum. Maybe a little bit of another push lower because we've got an ABC down. This looks like a bit of an impulse down. ABC high, we're going to get another push down for Ethereum before we again push higher. Ethereum will push higher, I believe, but not to new all-time highs. And then following that, it will follow Bitcoin. So the whole theme for crypto and for risk assets is being led here by Bitcoin and by S&P 500. So Bitcoin is a really major well-evolved asset now that we can use it to basically determine the direction for the rest of the market, certainly for the rest of the crypto market. But it also correlates quite highly now, I think, with the S&P 500. And they will move in the same direction as risk assets when trouble really hits the fan. So quite a lot to digest there, but I think it's really important that we understand the short, medium, and long-term outlooks for the market. So I hope that was helpful. I hope to be on the show live tomorrow, and we can, again, please do drop questions in, any particular assets you want covering. By tomorrow, I think we'll start to see some downside in this market. So we can discuss that tomorrow, Bruce. Look forward to catching up then. Thank you so much for listening. And yeah, bye for now.
The great Matt Dixon with the Market Watch Report, world-class analysis that we get on the Impact Money Show here on a daily basis. It is really interesting what's going on here. There's a lot going on. I know that there's a lot to digest, as he said, all around the markets, the world, really everything else. David and I mean, it's a scary time. It's a scary time to travel. It's a scary time to do everything. David and I will be in Korea later this week. We will be a guest at one of the conferences there in Seoul. Really looking forward to it. As you guys know, I am a sucker for a place that I haven't been, a country that I haven't been, and I've actually never been to Korea. I've never been to Korea. I've been to something like 40 countries, quite a few countries, but I've never been to Korea. So we're excited about going to Korea. We are going to, let me just tell you the name of, I can tell you the name of that conference here. Well, anyway, we'll be at that conference doing our thing, coming to you live. We'll be doing the show as well, but coming to you live with some interviews and everything. So that's going to be really interesting. We're super excited about it. Actually, let me see if I can just pull it up here real quick. Nexus 2140. Nexus 2140. So we are excited to be here at this conference. And really looking forward to it. I can even just do this here and show you guys. Nexus, this conference. So we have been involved in this conference in the past as a media partner, but we haven't gone there before. So it's going to be really interesting. Hopefully we have some good stage time and stuff like that. We'll see here, but here it is. June 21, 22 in Korea. This is really shaping up to be a fantastic event. Nexus AI Web3 Ecom Global Expo. Kintex Hall 3 is where it's at there. The Korea's largest ever cross-industry expo. The world's first, a top-tier expo deeply integrating AI, Web3, cross-border e-commerce. 500 plus exhibitors, 30 to 50,000 professionals, 150 investment institutions, and 3,000 global KOLs gathered. And I can tell you that that is going to be pretty awesome. June 21 to 22 in Goyang, South Korea, one of Korea's largest exhibition centers, creating Northeast Asia's core business district. We have the government endorsements on this one, high-level government lineup, across the board. We have confirmed guests here. You can see there is yours truly and Mr. David Porter there, Sir David Porter. There we are, myself and David. We are very happy to be confirmed best and going over there. So after that, we of course are headed to the Global Family Office Investment Summit. So we'll be in Korea for a few days. And then unless we get a wild hair or something like that, which does happen to us, we could swing over to some Asian country, but we'll probably, we're already booked, probably go straight into Nice at that point. Nice, France, beautiful Nice, France, unbelievable, beautiful Nice, France. We missed we didn't make the F1, the Formula One race this year, which is one of our favorite things to go to, but actually it is nice to even be there when all that stuff is going on. The south of France is the place to be. May, June, July. I mean, this is the place to be. All the money from the Middle East and everything comes there. People from the US come there. People from Europe come there. South of France, I always tell people if they talk about it, the air is soft. The water is soft. Like, you wonder why people go to the south of France until you get there during, the spring and the summer, until you get there. And then you know why that they're there, because it is so nice. I've never experienced anything like it before. It is something that is very special. So to wrap up the show, I'm going, since we talked so much important information here, but we talked a lot about the central banking cartel and why we don't have control. Doesn't matter who we elect, like the whole bit. I am going to play the Rothschild's tax. The Rothschild's tax. This is performance that we did in New York City about a week or two ago. It is still evolving. The Rothschild tax is a song that I wrote about the Rothschilds and the banking cartel, the central banking cartel, and how they are controlling us and taking our money. And we're figuring it out. We're figuring it out. It cannot continue. I want everybody to understand that. There is no way out except complete and total collapse and slavery. Like, that's it. There's no way out. We can never pay back the $36 trillion in debt. We have to print the money to pay it back, which again incurs more debt. Every time you print money, they tack on there a few percentage points. You never get out of it. And that's why this group over the past millennia has had problems, because this is kind of their thing. It's not kind of their thing, it's their thing. Tax and interest rates, and interest and usury and all that stuff. There's no way out except getting out of it. Like I said, you're never going to pay that back. So you tell them, hey, we're bankrupt. Bah! See you later, guys. Anyway, this is a song I wrote about it. Again, it is evolving. And we're going to do a very good studio recording of it as well. But here it is. I hope everybody enjoys it.
It's called the Rothschild Tax.
Hey Randy, I got another home run for us, man. This 2-bit exchange is absolutely amazing.
Hey Bruce, what's up, man? Yeah, why don't you tell me about that 2-bit exchange?
Yeah, that's right. And we're going to be able to list our coins that we want, that we support, and they're going to be on this amazing derivatives platform. It's absolutely awesome.
Derivatives? I love derivatives. I can't wait to be on the trade copy program.
So what I want you to do is set up an account and then send me your UID, and let's set you up with a trade copy system, and you just let it run. Copy our trades. That's it. Easy peasy.
So you want me to open an account, send you my user ID, and you hook me up with the trade copy system. I can't wait. Sounds spectacular.
Hey, Matt. Hey, listen, I met with the guys at 2-Bit Exchange while I was in Dubai, and this platform really looks amazing.
Yeah, hi Bruce. Yeah, thank you again for that heads up. I mean, I've looked into this 2-bit platform. It does appear to have everything we're looking for.
Yeah, that's right. 2-Bit, T-O-O-B-I-T. They have great liquidity. They have futures platform. There's a lot of functionality that I think you're going to like on there. And they really want to work with us. They want to work with the Impact Money Show. And as you and I both know, if they have a good product and they want to work with us, well, hey, that's half the battle.
I mean, basically, I love that copy trade facility. I love the features on the platform. It's basically very simple to use.
Our viewers only need to set it up to copy our trades, and they just do all the trades that we do. Makes it really easy for people to participate. I think they're going to love it. I'm pretty excited about it.
And yeah, it's definitely going to benefit people. I mean, obviously with all the years of experience that we can pack into it, and people can basically benefit from that. Yeah, I definitely think it's a goer.
Hey David, yeah man, I'm excited about it too. I mean, when you think of the ways that we can help our viewers earn money and be able to participate in the monetary revolution, this 2-bit platform just opens up all kinds of doors that they don't have right now.
Hey Bruce, I'm checking out this platform. It's revolutionary.
That's absolutely correct. And the futures platform is amazing. Great liquidity. And the copy trader program, people are going to be able to make the trades exactly when we make them and make the money that we make. It's a win-win for everybody.
Open for U.S. customers, and you can deposit money with a credit or debit card. Doesn't get better than this.
Beautiful. And what do you think we should use as a referral code?
I think we should use Impact Money. That's the one. Impact Money.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.